Hi, this is Sarah from Accountancy and welcome to number three in our series on UK property tax. Today I want to look at capital expenditure versus repairs. So this is off the back of looking at UK property returns and how to calculate capital gains tax on the sale or disposal of a UK property. Now, this is really, really important, the difference between capital expenditure and repairs, and it's something that a lot of people really struggle to understand the difference and the impact in these changes and differences. So I suppose I should explain that first of all. The thing to understand is that there's a timing element to this. So capital expenditure is seen as long-term enhancements or replacements or something that's permanent change to a property. And because of that, this capital expenditure, it can't be offset against property income. So for example, if you're renting out a property and you have lots of income coming in from your tenants, or maybe even in the first year of buying the property, you've got no income coming in from the tenants, or only a little bit of income, and you do lots and lots of refurbishments and renovation work that's considered to be a capital expense, then you cannot offset that as an expense against income. That just gets held onto and it gets offset against your capital gain whenever you sell the property in the future. So it's really, really important to understand this difference. Repairs, on the other hand, are seen as an expense and can be offset against the profit that you generate from the property in the year. So what's what? And I suppose I've already hinted at it, that capital expenditure is all about replacement, refurbishment or long-term enhancement. So for example, and that's to land or property. So for example, if you buy a rural property to rent out and you do a barn conversion, that barn conversion is a capital expenditure or capital expense. Likewise, if you have to demolish the original barn, the demolition is a capital expense. If you have to provide a new access road to the property, that's a capital expense. So one of the areas that gets more questions than others would be whenever you've made a significant enhancement to something in the property that you might see as a repair, but really it would be considered by HMRC to be a capital expense. So that would be the replacement of a kitchen or bathroom, for example, if you've up-spec'd them and made them significantly better than what was there in the first place. So functional is fine and can be seen as a repair. It's a replacement of units and cookers and so on can be seen as a repair and therefore treated as an expense against profit. But if you're going to really up-spec your kitchen or your bathroom, then that will be seen as capital expenditure and you won't be able to claim that against profit in the year. So some of the things that you might think would be capital actually are repairs. So for example, if you needed to repoint the property, that's actually considered repairs and expenditure against income. Likewise, replacing slates or tiles and things like that on the roof, that's also considered a repair because that's necessary for the building to function essentially. Painting, decorating, also considered repairs, as are mending or fixing windows, broken panes, things like that. And things like rot or damp proofing, anything like that can be seen as a repair and offset against income. So hopefully that's given you a bit of an overview as to why it's important to understand the difference. Look, we're seeing that HMRC inquiries are rife in this area at the moment, and they have quite simple ways of looking at expenditure on a property and making some assumptions and sending out nudge letters to challenge where they think people are putting more through as repairs than should be capital and so on. Or again, if people are doubling up and claiming it both through the trading income in the property and again at sale time as capital expenditure. But it's really important to understand the difference and to calculate the repairs and the capital expenditure separately, and to keep note and keep receipts of any of that capital expenditure, because remember, you can't claim any of that back until you actually sell the property. So that's really, really important to hold on to that evidence. So you've got that at the time of sale, which might be in 10, 15, 20 years' time. Hopefully that answers any questions that you've got. Please, as ever, feel free to ask your questions either in the comment section below or to drop us a line, and we will do our best to answer any questions that you've got. Thanks very much. Bye for now.